What is up, everyone? Good morning, traders. Good morning, YouTube. Hope everyone is having an amazing day so far. We're just starting off here. And as we enter the holiday season continuously deeper and deeper, we are getting less and less of volume on a daily basis, right? We're seeing traders really just go away. And as does the news, right? There's not really too much to comment on into the end of the year as we start to turn into 2023. So there's not too much, right? There has been some bond news. There's been some bond yields out of Japan that are making news, and naturally Twitter with Elon Musk. So why don't we start off with Elon Musk here? He's not directly addressed the results of the Twitter poll that he had executed to step down from Twitter, but Musk did cast some doubt on the results indirectly and said that Twitter would narrow who could vote in future polls. So a Twitter user posted on Monday that blue subscribers should be the only ones that can vote in policy related polls. And we actually have skin in the game in response to the Tesla CEO and Twitter chief saying, "Good point. Twitter will make that change." So Musk also replied with interesting to a tweet that suggested bots had dominated the poll yesterday, where Musk asked if he should remain at the top spot of Twitter. So, like I said yesterday, more than there was about like 18 million users that have voted. More than 10 million of those users, or about 58%, voted yes. They voted yes. Musk had said that he would abide by the results of the poll, and he said that Twitter would put a major policy change at the social media company to a vote by users in the future. So several analysts have called Monday's development a positive for Tesla stock, including Wedbush Securities analyst Dan Eves. The removal of the major overhang on Tesla stock is seen helping slow down or end any brand deterioration related to Musk. So we did see some of that yesterday. Let me just take a look here, where Tesla did gap up pre-market before actually selling off throughout the session. It did pop really aggressively off the 146, but it hasn't really made much headwind overall. With the general market falling like this, it's going to be hard for Tesla to get a pop in that. But this, I think, would be positive news for Tesla in itself. In other news, right, Japan yield cap, longer rates have rose after the Bank of Japan unexpectedly widened its yield curve control, prompting the government debt sell-off. So the 10-year Treasury yields, the U.S. 10-year rose 8 basis points to 3.66, and the 30-year rose 10 basis points to 3.72. The BOJ boosted the leeway on the 10-year JGB yield to 0.5% from its target 0%, up from the previous cap of 0.25%. The yen also surged 3.5% against the greenback, and Japan is changing policy because the inflation worries are really setting in. So realistically, it's been the case where the Federal Reserve, right, the U.S. has started this higher rate quantitative tightening cycle, and it's getting trickled around the world, right? Japan, very famous for those for that zero rate environment, right? Even the eurozone has also been raising rates. Now, I'm checking here the rate probabilities of a 25 basis point hike just a few days ago. It was about 75% or something, so almost 80% right now. It's at 62% with about a 38% chance of a 50 basis point hike to come out in February. Now, there is a lot of time until then. There's going to be CPI reports until then, and we'll see that happen. So Japan's move is widely seen as the beginning of a potential end to their ultra-loose economic policy, right? That's a little statement out of Deutsche Bank, and that policy has made them a big outlier compared to the central banks this year, having maintained rates at zero lower bound whilst other embarked in a tightening cycle, the biggest in generations. We've seen that Japan, along with other economies, has also talked about how inflation remains more of a transitory thing from the whole COVID fiasco and the whole COVID quantitative easing cycle. Now, realistically, it took a while for Fed Chair Powell to drop the term transitory, but it seems like Japan is still kind of holding on to that. Indeed, it's important to not to underestimate the impact this could have, because tighter BOJ policies would remove one of the last global anchors that's helped keep borrowing costs at low levels, just generally and broadly. So, with that being said, if we start hiking pretty aggressively in Japan and the Eurozone, which has already started, you're going to see that ripple effect throughout the world. Now, when it comes to individual levels here on the futures, yesterday, very low volume overall. Overnight, we had a pretty big spill into the 38.05 area, which pronounced about a 40-point bounce. Right now, it's kind of holding just below that 38.50, which is a massive, massive resistance zone to stop price from entering a distribution block to the upside. Now, we also have the 38.34 level. That's going to be a key area distribution low that actually starts the new distribution block to the downside, which I'm going to be targeting to the downside. The levels that I'm going to be looking at are going to be closer to 15, 38, 15, 38, 17. You can also take a look at the 38, 28 region, which was a low from yesterday, and naturally the 38.07.05 region. Those are going to be areas that I am watching. So with that being said, we'll see if they can accept the distribution to the downside, as we've seen sell side coming in over the past few days here, and seeing if we could propel and continue that into the end of the year. Now, keep in mind, like I've said before, the sell side, if it comes out on lower volume, it's going to make it a lot easier for buyers to step in come the new year. Having said that, I hope everyone has a great trading day, a great weekend if you're done, a great year if you're done. Happy holiday season, and we'll see you guys tomorrow for yet another update. And we're going to wrap up the updates this week. We're going to be finishing them on Friday for the year, and we're going to see you guys in 2023. So I hope you guys have enjoyed them, and we'll see you guys soon. Take care, and ciao, ciao.